And it makes for an interesting political dynamic as well, having, hedge funds and retail taking the opposite position, but this time retail being long. If you were to look at criticisms of the US government 20, 30 years ago, it would always be, the system's rigged, hedge funds and these multi-billionaires who've got capital, they keep benefiting from equities going up and the economy getting better, but this benefit is not being passed through to the consumer, to retail.
Right.
Everything's flipped now. So you have hedge funds taking short positions, whereas the retail consumer, i.e. the voter, is the one who's long. So if you see this narrative flip, and this is because, of course, of increased access to markets, etc., the reduction in legal requirements in order to trade and open stockbroking apps, etc. But if you were to see a large equity sell-off, as opposed to an isolated few men in ivory towers suffering, you now have a large proportion of your voting demographic.
It's the family voting, heart of the Republican voter base, or even the Democrat voter base. They're all invested in the stock market. But on the kind of financial establishment side, you've also got banks who keep raising price targets for numerous stocks. You get headlines repeatedly throughout the day. B of A, Citi, Morgan Stanley, JP Morgan, they're all raising price targets for indices and for individual stocks. So there is kind of a bit of a disconnection between the banks and the hedge funds on the financial side.
And it makes for interesting markets and following along.